Welcome to a sunny day in Johannesburg. Welcome to COBRA. COBRA is a pro bono initiative. It was founded by Schindler's Attorneys, Engaged Business Turnaround, and IQ Business. And the idea behind COBRA is to assist businesses in whichever way we can. We provide support by way of Zoom consultations. If you require, we'll meet with your team. We can meet with your staff. We assist in the turnaround process. We try and avoid business rescue in itself, but if business rescue is necessary, we'll assist in putting your business into rescue, just for the purpose of giving you a reprieve, so we can negotiate with your creditors and try and strike a deal through our qualified mediators. So the idea is to do whatever we can. We've also got a knowledge base on our website, www.cobra.org.za. So please go there, and we provide these webinars, these informative webinars on a daily basis. We do so with a view to giving insight by industry professionals, by our partners, in fact, to South Africans, businesses, individuals, sole proprietorships. And on that score, COBRA is about everybody, from the spaza shop level all the way up to the big business. We have the likes of Gigi Alcock, who advise at that spaza level, at the informal sector level. And then we have the likes of IQ Business, who advise our big business. So that's what we're about. Today we have a very, very exciting show. We have Lee Naik, who is the CEO of TransUnion, and he discusses the financial impact of COVID-19 on South African consumers. So this is a big one, and it's very, very important for all of us. A bit about Lee. Lee is the Chief Executive Officer of TransUnion Africa and is recognized as one of South Africa's leading digital and technology transformation experts. Lee is responsible for a portfolio of businesses across 8 countries that help businesses make more informed decisions and help consumers manage their personal information better to lead a higher quality of life. Lee's primary focus is on helping solving problems that matter across the African continent, including improving social and financial inclusions, eradicating fraud and corruption, and digital identity protection. In his previous role as Managing Director of Accenture Digital, he focused on helping organizations transform their businesses to remain competitive in an increasingly digital world. Prior to that, Lee was a Managing Director of Accenture's technology strategy business. He is a frequent speaker and commentator on all things digital and technology related across a variety of platforms. He was recognized as a global top 10 commentator in the inaugural LinkedIn Top Voices Awards. And what's not in here is that he takes security very seriously. In fact, they don't use Zoom at TransUnion for security reasons and because of the big data. So thank you, Lee, for using Zoom, for making a plan for us and to providing your insight to the audience. I'd like to also welcome the attendees and the Facebook attendees who are watching this live. Thanks for being here. Before I hand over to you, Lee, to introduce the remaining panelists, we have Emma Marseille, who is from IQ Business. We have Renee Klopper, IQ Business. We have Paul Michael Keichel from Schindler's Attorneys, Adam Kraker, the CEO of IQ Business, and Gary Barachowitz, who assists in these webinars. In fact, he's fantastic. He puts these webinars together. So let me thank Gary. He is from Schindler's. He does a fantastic job. So thank you, Lee. Over to you.
Thank you so much, and good morning to all the attendees. I see we have quite a few attendees that have joined already, and I guess we'll have a few more as we go forward. Like we've started talking about, over the last few weeks through COBRA, we've had many discussions around what is going on around us from an economy perspective. How do small businesses and large businesses actually get a handle on what they do to survive? Today's conversation is around what is going on around you. We find ourselves in a fortunate position as TransUnion, a business that started in 1901 in South Africa. We work with around 5,000 businesses in South Africa alone. I look after businesses in 8 different countries. And a large part of what we do is we see kind of the pulse of the economy, whether it's a small business or a large business. Today I'm hoping to share with you exactly what's happening with the consumer that businesses want to serve, and equally businesses and other businesses serve. In fact, today we're giving you a head start into a small business survey that will only officially launch next week, and we'll have a further COBRA webinar just on that. But for today's attendees, you get a first look at both the insights into consumers, but also the insights in terms of what's going on with small business. So, as has been told already, we'll cover some of these insights, and you can happily ask me questions throughout. If there are specific questions that you have, being the CEO of TransUnion, I normally get quite a few questions around a specific problem that you may have in your own capacity or in your business capacities, like being a member of COBRA. If you have a problem that's specific to your organization or to you as an individual, reach out to me personally if you're struggling. I know it's difficult when we serve this many consumers and you get stuck on a contact center. Reach out to me. Here's my email address, my LinkedIn, and my Twitter information, and I'll do whatever I can to personally help you in whatever circumstance you currently find yourself in. Let's, however, get on to the topic for today. This isn't meant to talk about the COVID from a health perspective, but it is worth telling you around some things that are interesting for us when we talk around the hardship that we face as consumers, individually like myself and yourself, as well as businesses. This juxtaposes exactly what's going on in the economy, and it actually gives rise to why COBRA exists and why we need to come together as businesses to help each other and to help the broader industry. What you can see from this data, which kind of racks up until the 14th of July, is that just over the last month or last 4 weeks, from an infection perspective, we've gone up from 70,000 up to almost 300,000 as of the 14th of July. Now that was something you'd know if you've been watching the TV and stressing around infection rates as we hit the peak of the infection rate. What is not known as well is what it means for the average consumer. Now, 2 data points are very, very useful for us as consumers that are on this call today is that as part of COVID-19, from a financial perspective, banks and lenders have actually offered up to consumers like you and I the ability to take up a payment holiday. Now, a payment holiday is something that consumers take up when they're struggling to make their payments under the National Credit Act. And this way you reach out to your bank or your lender and you actually ask them, how can I restructure my payment? What relief can I get? I'm currently struggling. Now, prior to COVID-19 starting, on average, we as TransUnion would see around 150,000 requests a month to have a payment holiday between your lender and yourselves. We saw a massive increase throughout COVID-19, even currently in the month of April that jumped from 150,000 to almost 500,000. In May, it jumped to 2 million requests just in the month of May. People asking to their bank or lender, help me restructure. I'm struggling to make my commitment. And June, which isn't completed yet because we see some of the requests from banks and lenders come into July still, we're already at above the 2.1 million mark. So that's interesting. The other thing that TransUnion does, which is really useful to note, is that given the wide variety of businesses we work with across telco, retail, insurance, and banking, as well as the SMMEs, we're a good proxy as to the economic demand that's happening right now. What we found is that as we went from COVID-19 starting back in early March to the national lockdown, we found there's a massive drop in COVID, in not just COVID-19 increasing, but we saw an increase in terms of the lockdown under restrictions level 5 and 4. There's a massive drop in the kind of economy demand, as much as 60% by estimates that we have in our data. We have seen a recovery as we've gone from level 5 to level 4 and now into level 3 or level 3 advanced. We're probably kind of teetering around the 15% relative to normal volumes. So from economic demand, if March was a good month, in fact, we in our business call the week of 11th March the last good week. Relative to the last good week, we're now sitting around 15% in terms of economic volume demand relative to that. That means that economic industries such as banking, physical branches, automotive dealerships, retail stores have all started to open. It doesn't tell you that people have money. It tells you that economic activity is starting to open up. Now, that's all I want to talk about, the infection and the correlation to financial hardship, which is the focus of our presentation today. In a future webinar through COBRA, we'll be representing something called the TransUnion COVID-19 playbook. When we started the COVID-19 lockdown journey, we had our team within TransUnion, which are strategists, actuaries, and people that model around the data. We actually identified 3 scenarios for South Africa. We called it Rocky, which was the kind of the comeback kid, Sylvester Stallone, where we'd actually get through COVID-19 and see our recovery by Q3. We're now in Q3 and Rocky has not happened. Lemonade was a scenario where we took the lemons handed to us and made lemonade from that. That would see the recovery of the economy kind of start to recover again towards the back end of 2020. And I Am Legend, named after the movie starring Will Smith, where it's epic disaster. And this is a scenario that we describe where we talk about the recovery taking as long as Q2 2021. Right now, we are sitting on the cusp of scenario Lemonade, which is a middle road scenario, and it's kind of teetering or kind of moving towards I Am Legend. In this future webinar, we'll talk about the modeling we've done at an industry level. So whether you're in telco, banking, retail, or small market, we'll give you a perspective using global models that we've completed that actually will help you think about business decisions you need to make for your specific industry, which may inform even your go-to-market or take up of certain of these things. Now, let's talk about financial hardship in 2 parts. Firstly, we'll start by talking about the consumers and asking ourselves the question, what are consumers feeling at an empirical level? And if we can figure out how they're feeling and how their households are doing, it may inform the strategies that we take on as either small business or large business. And then I'll flip this over and ask, and I'll use the exact same questions positioned to small businesses that we've just finished studying in the South African market. So before I get into South Africa, it's worth knowing that the study I'm about to show you, we've done in 5 continents and we've covered 7 countries. What's important to note is that financial hardship is not just a South African thing. On the back of the COVID-19 lockdown, what we found from a global study perspective is 76% of all millennials were impacted. Now, you'll hear me talk about millennials over and over again. Millennials are in the age group 26 to 40. In South Africa, they form the active part of our population. In fact, most businesses are designed with the behavioral traits of millennials. So if millennials exhibit different traits, you may have to change the personas or who you target. And if you are targeting them, you may have different product or product configurations targeted at this group. We found that in 5 of the 7 countries that we actually did the survey in, that millennials in the age of 26 to 40 were the most impacted. In other markets such as Canada and Colombia, we found that Gen X, which is the age of 41 to 55, were the most affected, but also followed by millennials. So in whatever we do as businesses in South Africa, we think about the role of millennials in that regard, for the reason that 1, millennials are the largest part of the active workforce. Millennials have 68% of them have dependents living with them, and they also have the most amount of financial assets on book in their households. So that's important to know as we go forward. We found 3 things that the study had kind of covered globally. 1, 22% of people that we studied across these 7 countries had lost their jobs. 45% of them that hadn't lost their jobs had seen their work hours reduced and therefore their income. And then thirdly, a second person living in the household, almost a third of them had a partner affected by similar circumstances. You will hear more and more throughout the study that it's not just the consumer that's impacted. If you live in a household with more than 1 breadwinner, the impact could be quite dire. On the right-hand side, we have titled it Bills and Loans. We call these payment hierarchies. And ultimately, we want to understand what are people concerned about when it comes to their household debts and their household payments. We found that 63% of everybody we spoke through in 7 different countries were most worried about their shelter, which is actually something very odd for us. Prior to COVID-19, the hierarchies are different. They would normally look at their personal loans, credit cards, and auto. But here people are worried about general unemployment. You would know that at the end of 2019, our unemployment levels were 29.1%. Right now, it's closer to the mid-30s, and our forecast models tell us it could go as high as 42% by the end of 2020. This is a view globally of what's going on. If we flip this over and start to understand the global impact in terms of buckets, a couple of call-outs. we found that 45% of all consumers across the world worked for small businesses that have an employee base in the region of 100 to 150 people. We found that generally all the impacted people financially, 77% worked at small businesses, right? And in the final column, people that had financial hardship, 13% of these consumers didn't know, how they meet their obligations financially. This is a really important point in that in South Africa, we have a high use of credit to run our lives. In fact, prior to COVID-19, we had 73% of disposable income that we earn as a national household being used to service debt that we take on. So prior to COVID-19, it was quite tough to service the debt we had, to take on more debt with the new pressure of high prices and stubborn prices and lack of availability. We then asked the question, if we couldn't survive prior to COVID-19, how do we now survive in this new era? So that's something to just think about as we go forward. So let's move on and talk about South Africa and bring it back home to what it means. Now, we've done this study on a weekly basis since the front end of the lockdown. So the data we'll show you today reflects the last 3 waves of the study. The very first thing we found was that 84% of all surveyed consumers in South Africa have been negatively impacted by COVID-19. Another 13%, taking us up to almost 90% have said they will be impacted, not just now, but in the near future. So going to level lockdown 5 and now being in level 3, with many people not being able to physically return to work, has impacted consumers. So this is the reality of what it's facing now. At TransUnion, we can retrospectively see a problem after it's manifested and people go into default and judgment. What we're trying to do here is on a weekly basis, try to ascertain before people get into this bad cycle of making bad decisions on paying off debt or getting into a judgment scenario. How are they feeling and what are they doing about it to actually make a difference to decisions they make today that could impact their livelihood? It is worth noting at this point that even though every credit bureau, including TransUnion, which is the largest credit bureau in South Africa, has to give out a free report on your credit held to you free of charge once a year, and there are 25.1 million active credit users in South Africa, we've never given out more than 500,000 free credit reports a year. So it's a scary thing. People don't want to know about their problems. They don't want to understand their finances. But my advice to you today is that knowledge is power. Get access to the insights in this presentation and start to think about what it means for your business. Some of it is being linked to how I feel or how I think, given where we are with COVID-19. Part of what COBRA seeks to do with these webinars is inform you as business, inform you as consumers as to how you can best make decisions around your lives and around your businesses. So 84% of surveyed consumers, growing as we speak, have been impacted by COVID-19. The next question is, okay, if 84% have been affected, where are these people and where do they live and which age groups they are? So in almost everything we study and whatever we talk about today has detailed reports behind that, which we'll make available via COBRA as well. We found that the largest impacted generations are in the age of 26 to 40 and 41 to 55, which is what we call the millennials and Gen X. There has been impact in the other 2 generations, but the largest impact that worry us as TransUnion, given the role they play in economic recovery, is the millennials and the Gen Xs. In terms of where the impact has been felt, we found that the top 3 economically active provinces in Gauteng, Western Cape, and KZN have been the most impacted in terms of COVID-19 from a financial perspective. It's also where we see high levels of COVID infection given the density of populations generally. If we then ask the question, okay, how has that impact translated in the household? Now, on the extreme left of this chart, it gives you a view of the 2019 household income at a household level. So the blue, for example, is a household income of less than 100,000 rands on an annual basis. So what we're saying here is that there are 62%, right, of people that are impacted that earn less than 100,000 a year. Now, that talks about the disparity of South Africa. South Africa's income Gini, which is the measure of those that have and those that don't have from a wealth perspective, is in the region of 0.63 up to 0.68 and growing. So the disparity between the kind of different ends of this continuum are very, very vast, and the impact is not always just being felt in the middle. It's being felt by those that could barely afford to survive prior to COVID-19. Another lens we've taken on the middle of the screen is where do the consumers that are most impacted actually work? We've seen the impact in 3 areas, and you can probably guess these industries: construction, food services, and retail. So people that have worked in these industries, given the nature of the lockdown, given the nature of demand for these services, has seen almost 90% of people working in these industries being impacted financially on the back of our lockdown. And finally, and as per why we're having this presentation, when we look at the type of businesses where people work that have been impacted, once again, 64% of consumers that we engage with in these surveys that were impacted worked in small businesses. Now, what is true and why COBRA seeks to have these conversations, we as an industry know that the future of our economic growth is not just linked to innovation within the incumbent large players. We need to find ways to give rise to further entrepreneurs and startups and find those that have ideas and smaller businesses scaling up. If we see that small businesses are struggling, not just in terms of their very survival, but the employees that they have are also struggling, it's a double impact, both in terms of employment and hardship for the end consumer, but also the very survival of future economic growth is given a kickback because of these very businesses that had great ideas not being able to take that forward into the next level. Now, I want to answer 4 questions for you. If you want to think about the impact once again, on the bottom right-hand corner, what has been the impact on jobs? Now, we're forecasting that unemployment may get to the high to mid-40s by the end of the year. What we found over the 4 waves of the study is that initially we found that after about 2 weeks of the lockdown, 1 out of every 10 people had lost their jobs. Right now, at 16%, 1 out of every 6 people that we surveyed had lost their job. On the top left-hand corner, we found that those that hadn't lost their job, for the remaining population, almost 37% of them had had their hours reduced in terms of working. On the bottom left-hand corner, to further exacerbate the problem, we found that 28% in week 4 had a partner in their household, could be their spouse, could be somebody else they're living in their household, that was also impacted in terms of having lost their job or having lost their income during that period. In the top right-hand corner, from a small business perspective, we found that close on around 25% of small businesses have seen their orders dry up and have seen their businesses close in the period of these 4 waves that we studied very, very closely. So that's really important to note as we think about the impacts. Now, I did mention to you that millennials are something that we study as a business extensively because it has such a big impact on where we go. What's worrying for us is that the millennial population, the data is actually a lot worse. From a job perspective, we found that 1 out of every 5 millennials have lost their job, coming in at 19%. For those that hadn't lost their job in the millennial population, 41% of millennials told us that they had their work hours reduced, further exacerbated by 32% of millennials having a partner in their household that had their jobs lost or their work hours reduced. From a small business perspective, we found that the baby boomers, the older generation group, had told us in the generational cut that they'd seen the most small businesses being impacted in their generation. Okay, let's move on. So when you think about the impact on consumers, we know it's dire. Hopefully this data has given you a few more factoids as to how these consumers are really feeling. What we now want to understand is how are consumers responding in terms of the financial duress that they feel at a household level. So the first thing is we want to understand on payment obligations, Are people starting to struggle to pay? And how long will they have before they struggle to pay? Very, very simply, we found that almost a third of people did not know how they'd make their next month's payments. So coming into the end of June, which has just finished, the data is a few weeks old now, we found that almost a third of people did not know how they'd make their payments. Very few people, only 22%, could see beyond a 3-month horizon. And when we asked people, how much would you be short on making your monthly payments? The average amount came in at 7,098 Rand. Now, for me at TransUnion, that's quite worrying for a couple of reasons. One, the average income of the surveyed population, which covers all 9 provinces, all race groups, and all income groups, is significantly high. 7098 tells us that we are very indebted from a credit perspective, and we're probably breaking on the edge of being able to afford things. And unless we took specific action to actually deal with this indebtedness, those people that we're not able to make their obligations would actually struggle to actually stay clear in terms of their credit health. And the credit health is what allows banks to lend money to you. So we'll talk a little bit about that later, but it's important to note that there is a lot that we need to deal with as consumers that we already struggled to deal with prior to COVID-19. Now, when you think about what people are concerned about in terms of payment, I won't go to the generational cuts, but in terms of the top 4 concerns that people have, number 1 was rent. How will I afford my rent? 41% were worried about the ability to pay their rent. 14% were worried about paying their utilities, so your water, your electricity, maybe your levies. 38% their personal loans, and 35% their accounts. And then finally, internet and mobile coming around the 30% mark. Now, what's important to know about this is that when we think about the future of South Africa, the future of the new normal, as many of us call it, people are starting to make decisions that may actually impede some of those business strategies. Now, you found that initially in the top 5, the shelter thing comes across really, really strongly. We're worried about our survival, of how we'll protect our families, regardless of our jobs that we may or may not have right now. So protecting our livelihood, keeping a roof over their heads is the number 1 concern. And then how we actually maintain those facilities that give us ability to access money. Things like a personal loan are things that people rely on extensively in South Africa to actually get access to money on an unsecured basis. If you can't pay that, you may not get more money to actually keep the credit going to kind of manage your current livelihood. And that's something you have to think about. Will people make more judicious choices on taking on credit? Will they save for purchases? Will they shop around, shop down from luxury into standard mass market branding? These are all choices we'll have to make. So what is the game plan for these consumers? Now, a couple of things worth noting, and these are really stark things that we all need to get to grips with as businesses in South Africa. 60% of consumers have cut back on discretionary spending. And what that means practically for us is when you think about this cutback on spending, a lot of the businesses we have in South Africa are linked to things where we want consumers to take from the discretionary part of their budget and spend on that. But the very first thing that people have said, we're going to cut back. And we're actually going to think about how we actually spend less on these things that are luxuries that we have in our household. The must-have versus the may-haves, these are things that we're worried about. So what else have they done? They've canceled subscriptions and memberships already. So whether it's a gym membership, whether it's a golf membership, whether it's a membership to some kind of community group, it's extra lessons of some sorts, those have been canceled. Now here's the worrying thing. Digital services are going to take a hit in a big way. One of the things that people have done, and I guess we'll see this in the data in the next month or so, the likes of satellite television, DSTV, Netflix, as all the way down to your mobile service provider and your satellite internet, those have all taken a hit. Now, even though we want people to transform and actually move into a new era of making better choices, right? In the meantime, some of the pivots we are making as businesses may be impacted because people are saying, to survive, I may have to stop some of these things that I've had to do previously. So that's just one perspective as to what's changing from a household budget perspective. Are they delaying any purchases? Are they making any big decisions on the back of what lockdown has done to them? Well, of course, we've stopped vacations. 42% said they've stopped vacations. 39% said they've stopped their home improvement. Some people are stopping their purchases on spending on education, which is quite scary to us. We know that there are many forms of education, but there's something that has to change in terms of keeping people educated. This is how we grow the grassroots community, and also how we help people to reskill to survive the changes in the job market. From a home purchase, auto purchase affects our financial sector. People have said, I'm going to hold back on buying a house over and above not improving my house. I may delay a purchase on my home, on my car. Some people have gone as far as telling us they won't have kids. They'll delay their weddings. And that tells you some of the drastic decisions we're going to have to make as consumers in the way forward. Just the final part as we wrap up the consumer section, Emma posted a question around exactly, what advice would we give? What are people doing right now? So a couple of things worth noting, and I won't go to the detail of the slide. One, some people do have money from their savings, but their savings are running dry. So 38% of people told us they would tap into their savings to deal with some of the financial burdens they had at a household level. More worryingly, people have told us that they'll pay a partial amount, or some people would say they had no idea as to how they would pay in terms of their obligations that they have right now. So that's important to note. So let me just maybe address some of the concerns that have been noted earlier. I think the first thing to note is that that consumers actually need to get control of the information they have. So the first thing, Emma, I would say to people is, as a consumer that's on the webinar today, or on Facebook, on YouTube, we need to be able to get control of what we don't know. Access your free credit report through your bank, through TransUnion, get to our website, get your report. It is free once a year. It helps you know what you're indebted for, and those decisions will help you make better calls on your budgeting within your household. Some people take on more debt, already being in a dire situation in terms of affordability. Knowledge is power, so get the knowledge you need to make your decisions. The second thing is many consumers are now shopping around. So if you need to buy something, ask yourself the question, is it something we really need, or is it something we can delay? Can I save for it on a monthly basis? Can I put a lay-by in? Can I do away with this purchase completely? What you do need to know is, given the dependence of consumers on credit, it's important for us to get control over our credit health, because if you are locked out from a judgment that goes onto your credit file, it could be as much as 5 years that you are precluded from accessing further credit in the marketplace. So that's really, really important. So let's move along to the SMME side. Now, I'd encourage you, if you have any questions, I do want you to pose the question. I've got Emma and her team helping me out with that. So if you've got that, I'd encourage you to please ask your question, and we can actually get going on that. Now, from an SMME perspective, what we found is that from an SMME perspective that we want to understand what SMMEs are doing. We know that during the period of the lockdown, we know that people have been saying, SMMEs are getting help. There's a UIF TERS fund. There's access from the finances of banks. There's a lot of support available. We've heard that loud and clear. But no one has actually asked, has these SMMEs, have they actually received the benefit? How are they doing through that? So let's give you some perspective as to what is going on around the SMMEs. And this data has literally come out in the last day. It'll be officially launched during the course of next week. So we surveyed across all 9 provinces, once again, SMMEs, and they would fit in the group that's around 100 to 150 employees at maximum in terms of this. What we found was that, almost 99% told us that they were struggling to operate right now, or they'd actually close their businesses temporarily. Only 1% of SMMEs gave us the positive feedback that they'd actually been able to thrive during this period. So that's something I think we anticipated, but it's affirmation that the majority of SMMEs are currently struggling. In my earlier slide, I mentioned to you that we've seen around between 20% up to 33% of businesses over the period of lockdown starting late March. In that period, almost a third of them have already shut their doors on the back of orders drying up or a lack of cash flow. The second data point to take away is that 78% of SMEs have told us in our recent study that they've seen a significant decrease in revenue linked to a lack of demand, linked to a lack of cash flow, and that is a worry for us. This survey covered both B2B as well as B2C, and you can see from a distribution in terms of the impact for the businesses being impacted. They're not just serving businesses only. 23% were serving primarily consumers, 41% were serving businesses and consumers, and 36% are just doing businesses. Now, it's important to note when you start to connect the dots here that on the consumer side, consumers are struggling at a household level. So they're struggling to take up services from these businesses. And if some of the SMEs are dependent on consumers buying their services, they lack of available cash and liquidity to take on the service is a scary thing for small business because they can't risk giving away their product and services knowing that consumers can't afford it. And if they do give it on credit, they have the risk of not having the monies collected to replenish their stocks and to further sell. And in any event, by then giving away their stock on credit, they may not get the money back given the dire indebtedness of that population right now. So if I then ask the question to the SMEs, how long do they think at their current rate of business they will be in operation? Now, it is a mixed bag, and I guess it's a glass half full and a glass half empty. We found in the data that close to 50% have told us that they will not survive at their current rate of business for more than 6 months. Another half or so have told us that they will survive, more than 6 months onto a longer period. So it is worrying to note that the SME population, a large proportion have already had to close shop. A large proportion have had to make tough calls just to kind of keep their businesses going. And you'd ask yourself, Lee, why do you think that such a large proportion are struggling to say they'll survive beyond 6 months? A key reason worth noting around this is that for many, many of your SMEs, they actually are led by the actual principal owner of the business, was in fact a consumer. So on one hand, the owner of the kind of small business is actually a consumer that's struggling in their household with their own kind of budgetary expenses. You now have a lack of cash flow, a lack of orders coming in, and they now need to make a dire call. Do I stop my small business and go back into personal employment or get a job again in a tough job market? These are the decisions that are currently being contemplated by small businesses across all 9 provinces. If the question is how likely is that your business will recover from the impact of COVID-19, there's a great sense of positivity in the SMEs that we spoke to in the last week or so. Only around 6% or 7% said they will definitely not recover. I think some proportion has hope that they will recover, and that's why the likes of COBRA and the bigger institutions in South Africa are looking to help SMEs. We believe that they will drive economic recovery in the period up to 2030. So we want to get this right. We want to empower SMEs. So there is hope there. There's only 18% tells us they will definitely recover and thrive coming out of COVID-19. So that's a bit of a balanced position. I think what happens right here and right now, what happens that out of this webinar or future webinars, what you do as a small business or as a large business that helps small businesses, what decisions we will make are going to be key to how this segment of business actually recovers in the go forward. Okay, let's move on and talk about a few more things. We wanted to understand in terms of these SMEs, how concerned were they to meet their current obligations? And as I said, the SME population are both consumers that have struggles in their household, but they also have cash flow and order pressures as well. What we can see here is that 75% of SMEs that are dependent on paying debts to creditors, to banks, to other financial institutions, 75% of them have told us that they are very concerned, extremely concerned about making these payment obligations that they currently have. And when we asked them what were they most worried about, they told us they were most worried about paying their staff. Payroll was a worry. It's not just for small business, for all of us in business. We worry about how we'll manage paying staff and salaries, but almost 60% have told us that that was their number one concern as to how they keep the livelihood of their employees going and how they make up their payrolls. They were also worried about rent and leases on premises. When I interact with our small business clientele, it is a big concern. Many of the leasing agents or the property owners are reluctant to give any kind of grace on rental payments linked to reduced turnover for these SMMEs. So it is a real concern for them. Owner, shareholder salaries. How do I take a salary when I can't pay payrolls? How do I do that? And then services and other utilities that maybe third providers, suppliers into the organization. So just one more slide, and then we're kind of going to wrap up and then do some Q&A. What changes have businesses made during COVID-19? I guess the biggest one that we heard loud and clearly was they've increased their work from home technology. Like at my business at TransUnion across the different countries I look after, it's something we've all had to double down on. We're not sure how long the lockdown will take. We're not sure whether a higher lockdown level will come back in place or whether, the COVID-19 curve will start to flatten sooner. So work from home technology was the number one kind of change that small businesses have made. They've tried to increase marketing and get their services out there. And then they tried to increase their business and IT infrastructure, primarily linked to a digital first channel. As was earlier introduced, my background is in digital transformation, which I did for 20 years prior to TransUnion. We do know that the only channel to your consumer is now digital. It isn't an optional channel, it's now the only channel. Anything post the digital channel is optional at best, and mandatory or regulatory enforcement will force us to go physical. But digital is the only channel. The phone you have in your hand, the Samsung, the Apple, that's how you will need to get to your consumer as a medium. Having said that, building an app is not the silver bullet that everyone thinks it is. We're going to question the proposition, question our relevance of our product in a highly commoditized market, and figure out if you are going to invest in marketing a product, is the product something people actually want? People are shopping down, why are you selling up? If you are investing in business and IT calls, it's the wrong time to make the wrong bet. Are they researching enough? Are they checking what their peers are doing? What's working in Brazil? What's working in India and other emerging markets? Are they doing that? So a large part of the decisions being made, which in my mind is the right kind of prioritization, it's about work from home, digital first. Am I driving e-commerce? Am I spending enough money to spin up my digital first infrastructure? That's what's been happening, and those are the right calls. But having said that, a lot of those decisions require money, and it requires small business to make more judicious calls. And one of my key advice points is for small businesses to make tough calls. I've had to do that in my medium-sized business that I joined a few years ago, and that's a hard thing to do, to make tough calls, especially in a business that ran the same way for 100 years. It's very tough. It can upset many, many people. And I think these are things we're going to have to do to be relevant in a world that will only ever be, first in this way. So second thing, in terms of what have these SMMEs done in terms of their customers from a kind of request? What are people asking them? So clearly consumers of their services are asking for new payment terms, consumers asking for payment holidays and discounts and negotiated prices. The biggest thing is payment terms, and that's something to be careful of, because as SMMEs, the biggest challenge we have as small to medium businesses is that you could give a payment term. There's a high likelihood, given right now the nature of our business, that we may not be able to survive that actual recovery of the funds on payment terms. Discounting is a strategy to work. We've actually seen many organizations offer up discounts to people that owe them money in the hope that they'll get some of the money back, if not all of it. So let's move on as we get to the tail end of the hour. And I guess just the last slide I've got here is, we wanted to know, is the support mechanism working? So we asked, what relief or support have you received? So it's good to hear that 53% of the base that we spoke to had benefited from the UIF relief through the TERS funds. That's good that that's working. 27% said they hadn't really received any support. Another 23% told us that they had been granted payment relief in terms of terms, extension from a 10-year perspective, and some facilities have given them actually payment holidays. And as you look forward, what kind of help do they need? And this is useful once again for those on this call that are wishing to give assistance to SMMEs. SMMEs are saying they're looking for ways that they can improve their cash flow, finding ways to find new customers in a tough market where all consumers or customers look like customers that they wouldn't want, how they access funding, and finally, how do they diversify their customer base, having been quite steadfast on both their product and where they actually work. Okay, so what is my takeaway from the position I sit on in the middle of a digital economy, working with thousands of businesses and also working with around 25 million consumers and their data? I think one, consumers were badly positioned in South Africa, both in terms of our Gini index of 0.63, but also in terms of the level of indebtedness. Almost 73% of the income we earn as consumers goes towards servicing debt prior to COVID-19. This will actually go on a bit longer. So unemployment will increase, and I think the disparities will increase in the market. So we need to bear in mind that consumers are going to struggle to make calls. The choices that they will make have fundamentally changed what we call the persona of the consumer. So what you've assumed about Lee Naik and the choices I will make about a car, a house, a magazine, a phone will fundamentally change given this threshold now being broken on indebtedness. So as we look at the data, we'll see more and more people actually struggling to make decisions around what to buy. So don't take your consumer for granted. Think about the context within which they now exist. Whatever decisions they do make will be actually linked to very, very practical calls around that. So then in terms of the actual, the economy and where we are right now, from a consumer perspective, I would encourage people to get access to your financial health. If you're a small business, equally you need to do that. Understand your level of indebtedness, understand where you are. When the larger banks and other institutions need to look back and say, how have you responded, right? We have found as TransUnion that only around 22% of consumers have actually gone to their bank and said, I'm struggling, help me. Whereas we know that there are many, many more people that have actually turned a blind eye to the problem. You can't actually do that. If you want to survive this period, you've got to own it. It is tough, but I want you to proactively engage as an SMME and as a consumer and actually do this. As I mentioned, digital first is a primary strategy for the remaining part of this year. And in my mind, it is the new normal. We need to think about that. And then finally, you will hear more and more about a concept we call friction right. As you think about digital and digital first, the entire burden of paper, whether it's to open up a bank account, to get a cell phone contract, to get food to your door, to open up a new account, to service a utility bill. We're going to talk about a concept called friction right, which is a combination of having a seamless experience for your consumer to access your service as a business, but your consumers are expecting you to help them be mindful of the risks that come about with cybersecurity. You may know that yesterday there was a social engineering attack at Twitter, and many high-profile profiles were actually compromised as part of that. In South Africa, we have found that more than a third of all consumers in the period of COVID-19 have been the victim of a fraud scam. So if you're going to be relevant as an SMME or as a large business, you need to think digital first. Think about why would your customer come to your front door, your shop front in digital, and then what level of experience will you give them for them to actually want to buy from you or engage with you as a business. So we're about to get to questions, but before I do that and hand back to Emma to kind of champion us through that, I do want to remind you that number one, these calls, these webinars are being pushed forward on multiple channels, and they will be shared afterwards. The detailed reports that go behind this presentation today will be available on the TransUnion.co.za website. If you as a business or you as a consumer have a specific concern about your own situation, email me directly or hit me up on LinkedIn, and I'm very happy to help you figure out, what we can help you do for your situation. Emma, with that, let me turn this back to you, and let's see whether we can help with any questions that we may have from the attendees today.
There are questions, but before we get there, can I just ask something?
Of course.
When it comes to credit ratings of individuals, the credit bureaus are going to be forgiving in relation to defaults over this period. Am I right?
No, it's not correct in itself. So let me explain to you how that works. So a credit rating or credit score, there are many scores that people have. So most banks or lenders use a variety of different scores. What's important to note is that payment holidays, if you've applied for a payment holiday, then there's leniency in terms of how we treat that regarding credit records. If you haven't made a payment and it goes beyond an acceptable period, typically 3 months, then the bank will tell us as TransUnion, Emma is now defaulting, record the default. If that goes longer than 3 or 6 months, you may then see the lender going to a court to get a judgment against your name. So I would say don't assume that there's leniency. Leniency only occurs if you've applied for leniency per the National Credit Act and it's been approved by your lender.
Yeah, you see, I tell you where I have a problem with that, and where I think there should possibly not leniency, but rather default in the context of an act of God. Okay, so it gets highlighted as a default because now we have a problem, we have a dilemma. Consumers are going to get out of this, and now they're going to have poor credit ratings, which is self-defeating in getting the economy going. So it's actually going to be a stumbling block, and surely you guys need to consider having a separate score for acts of God. So that people know that this is not a serial defaulter. This is not somebody who wants to get out of payment. There's somebody who wants to pay, but physically could not pay, could not do it. Really that's needed.
So what's happening right now is that you would know that credit bureaus hold a record on behalf of your credit industry. And we're not necessarily the guys that tell you what your specific rating is. There's a model of how that works. All of us work under the National Credit Act, under the auspices of the National Credit Regulator. Right now, as we speak, discussions to the point that you're making are undergoing as to how, whether it's amnesty, debt review, or some other mechanism may be used to actually help in that regard. So that is something we're waiting for as an industry. And once it comes on board, both the banks and other lenders, as well as credit bureaus, will align to the regulators' decisions on how they'd like to tackle this. But it's definitely something that has been raised with the regulatory players, and it's something being contemplated as we speak.
Yeah, because as a credit provider, Schindler's attorneys, we'd want to know, whether the default is related to an act of God or not, because it's relevant when taking on a client and giving credit to a client. No, that's great to hear that it's being investigated. I have a question here from Adam. Thank you, Lee. The insights you provide are valuable to track the unfolding economic crisis. The take-up of COVID-19 loans so far has been very slow. Do you have a view on whether this is due to demand-side appetite, where businesses are reluctant to take on further debt, or supply-side processes, risk profiling, etc. in the banks? What changes need to be made in your view?
So it's a combination. I think on one hand, consumers on the demand side clearly have a demand for credit. I don't think, Adam, it's a matter of liquidity. I think it's a concern about risk within how lending happens. And I think the point made earlier by our host is exactly along those lines. From a bank or a lender or a financial institution, we now need to contemplate both a matter of the balance sheet as well as liquidity in terms of this conversation. And for many organizations right now, what is happening, Adam, is that we are working as bureaus and analytical providers with the banks and lenders to come up with new models to help understand you better. At TransUnion, our model is called Credit Vision, and it's actually a model that helps to understand behaviorally what's going on. So, Adam, we'd like to judge you not just based on a point in time, but to understand exactly behaviorally whether you've been a good guy that's going worse, or whether you've always been a good guy that's suddenly out of circumstance in a tough position. So using the latest AI analytical models, we're looking to help on the supply side, give the lenders that have access to the money to lend on the demand side more comfort that Adam or Lee or somebody else may actually be a suitable customer, even though the data at a point in time says otherwise. So there's still some time to go. So I would say that the answer is there is a chance of this evolving. Some of the banks are evolving their strategy. We call this the use of alternative data, but some banks and lenders are still trying to figure out how they'll do this. This does take time, unfortunately, to change risk strategies, but it's something that almost every bank we're working with right now are contemplating. My view as TransUnion, as is Lee, is that there are many customers out there in what we call the thin file base that actually are emerging as good consumers. One of the challenges with how lending works is that it's very hard to see somebody that doesn't have a credit history. So what we're trying to do is figure out how we use data that's alternative in nature, whether it's cell phone data, whether it's social data, whether it's non-financial data, to help us understand people better that could in fact be suitable for taking up credit on the demand side. So, but if a long answer, it's a combination of both the demand and the supply side, Adam.
Okay, we have another question here from Emma. Lee, the indebtedness of the population is definitely a problem pre-COVID, and COVID has brought it starkly into focus. What are your recommendations for people, businesses to try small steps to recover or perhaps change their habits? And just tied in with that question, have you seen Ivanka Trump's campaign that was recently launched? It's called Find Something New campaign. And that's kind of, is that something that you think COBRA should explore, where we provide training, COBRA provides training, so there can be a pivot in your skill set?
Okay, so there's a couple of things. Let me just capture the basics. The basics are that, in my view, we aren't doing enough to understand the context that we are in as consumers and businesses. Only 3% of all active consumers that take on credit actually understand what their credit health is. If you don't know, Emma, how bad or how good a position you're in, how do you make decisions on your budget and how you spend? The same applies to SMMEs, right? We have business reports, consumer reports, and these things are available digitally. I don't understand why we're not doing it, other than we are scared of bad news. My first advice is figure out what you don't know and use that to help you make better decisions as a consumer. If I flip it to the strike concept that Ivanka Trump has been driving out in the US, it's really interesting as a concept. But the first thing to think about from a COBRA perspective is how do you help people, and Adam would appreciate this, do something we call portfolio rationalization. For you to try something new, something has to stop. In my business and other large businesses like Adam's, we've made bold calls as to what to stop doing and said, if we stop doing that, we can find the funding and the effort to try something new. So before we try something new, to your question, figure out what you can stop as a bold effort to pivot your business into something new. As far as something new goes, this is a really broad question that will be covered across COBRA in many further conversations. One, to drive relevance is a requirement not just on you as a business, but on we as employees and as consumers. Having access to things like COBRA and the training we provide, access to MOOCs like Coursera, edX, Singularity, we can learn skills individually for our own relevance. And finally, there are emerging demands for new products and services like the Ivanka Trump advert. Having said that, though, it is very difficult to pivot in a highly commoditized market. My view is to figure out how you can stop doing what you're doing in your business that isn't revealing new profits or new revenue, and try and double on the extra effort to find increased revenue, knowing what you can do successfully now. If you have the time and some limited effort to try something new, then try. But know full well that on the demand side, there's a high constraint in terms of discretionary spending, and that discretionary spending will always be targeted to established players that return value on those demands. Let me hand back to you. Any further last questions? I'm happy to take a few more, no problem.
One final, I'm going to combine two questions into one, so you can get one on. Hello, Lee. I'm aware the government has attempted to support SMMEs, but on a broad level, has enough been done to ensure that businesses survive COVID-19? do we really have the equivalent of COVID-19 economic rescue? What would you advise differently?
So I think, Ashraf, there's a lot more that can be done. I think the UIF TERS Fund, the likes of Solidarity as a kind of a private-public partnership, has done a lot to bring funds to bear from a funding perspective. In my view, there are three things that SMEs have always wanted, and this is research that goes back 10 years. Firstly, they need access to funding, and that funding isn't as easy to have. The banks and lenders do have the money, the VCs have the money, and other funds have the money, but it's such a convoluted process to access money, and the proof of burden is on a SME. I, in my experience, have seen many SMEs ask for funding, and the biggest question is, where's the asset on which I base the funding decision? If it's an e-commerce business, there is no asset. So we need to find new ways, Ashraf, to contemplate how we give money. Secondly, SMEs struggle with access to procurement, whether it's private sector or public sector. We as buyers of SME services, we're too slow. In government, it could take up to hundreds of days, and the same applies in the private sector. And SME typically have in 1 and 3 months of available cash flow to run their businesses. If we can't improve our procurement cycle, SMEs may be who we want, but they can't wait for us. Finally, the third thing that SMEs need is help. We call this Big Brother help or crossing the digital divide. SMEs have ideas all day long. The money they need, the help they need, the business planning they need, the commercialization they need doesn't sit with them. It sits with us as big business, as COBRA and other such bodies. We need to find a way as big business to make ourselves available over this digital bridge to say, we will help you as small business to navigate these challenges. So that's the three things, Ashraf, that needs to be done more of. Funding is only one component. I would argue that if you gave me money as an SME, I would try to do something that may be incorrect. I may pay off my here and now because I'm worried about it, and I won't think about my future relevance coming out of my reconstruction phase in COVID-19. I hope that helps you.
And if you're going to be putting money into a business, for instance, for staff salaries, please speak to COBRA, because there are legal technicalities when it comes to post-commencement finance, security, that we can assist you with to ensure that you get preference. So it's another way that we can assist in providing legal advice. So Lee, thanks so much. It's a wrap today. There is one question. Can you apply for a second payment holiday plan extension? We'll deal with that on our website. Please go to our knowledge base. It's on the website, cobra.org.za. Thank you to the attendees. Thank you to the Facebook attendees, and thank you to the panelists. Until tomorrow, this is Rab. Goodbye.